Hello friends, this is Raj Sastry from Raj Option Trading. Today is June 14, 2022. Hope you're all doing well. In today's segment, let's take a look and see how to profit from money losing companies. I love to trade with the trend. Right now trend is bearish. That's why you got to employ the bearish trading strategies like buying put options and buying put spreads. So with that, let's take a look and see how to profit from this bear market. So look, we got here TradingView, one of my favorite stock scanning software. I could go here to my watch list here and quickly see what's going on. From a watch list perspective, typically I like to look at the futures and see how the futures are doing. Look, from a futures perspective right now, looks like we got some rebound going on in S&P 500, slight rebound as you can see here. And we got here Dow Jones Industrial Average, also slight rebound, not too much. NASDAQ also same story, slight rebound as you can see here. So with that, let's jump in and see how to profit from these money losing companies. So what I would do is I would go into products here and go to the screener. So I would go with the stock screener for now and click on it. Look, I got a stock screener right here which is coming up, and what I've done is I've put some filter here. Look, my filter right now, let me put this collapse this here so you can see completely. From a filter perspective, I got high valuation, no profit. If you want to see what is this filter, I can click here. Look, from a filter perspective, I got here common stock, ADR and so on and so forth. And I'm looking at market capitalization more than $1 billion. Volume, I'm looking at more than 500K. I want it to be fairly liquid. And I want the stock price to be about $20, so that way you can profit from stock coming down. And price to sales ratio perspective, I want price to sales ratio or valuation as you call it. I want this to be about 10. That tells you these are very pricey. These are highly valued stocks. And I want the volatility to be about 2, mainly because sometimes there are some stocks which are already in the process of being acquired. Think stocks like Anapan as an example. I don't want such stocks to go show up in my filter. That's why I say volatility is more than 2. These are slightly volatile stocks, not the stocks that are not moving at all. If it is not moving, I'm not interested. And I want net margin to be below 0. That way I know these stocks are really not profitable. So that's my basic filter, nothing fancy here. So with that, let's now jump in. If you like this filter, you can just take a look at this, and you could save these filters. Look, I got here. You can click on this icon here and just save your filter, so that way it's available for you next time. And look, I got list of stocks here starting with Seattle Genetics, ITCI and so on and so forth. One of the reasons I love TradingView is you could just click on here and go to the chart and look at the chart at the same time. So I'll click on Seattle CGen here and double click here, and it will bring up the chart. So that's one of the reasons I love it. You could look at the chart as well as the stock at the same time. So let's see what's going on here. SCGen, there you go. It's a little slow. All right, so look, we got here both the chart as well as our scanner here. Let's wait for a couple minutes here. Look, we got our scanner, and I could just click on this here. I could look at both chart at the top and my scanner right here. So as you see here, I got the chart itself, and I got a couple of indicators here. I'll bring it a little bit down. You could see here, and I got chart at the top. Look, I got nice looking chart here. And first I got RSI. I want to see how is the momentum going higher or lower. And then I got here one more here. This is on balance volume. And then finally we got one more here. Let's quickly do label here so you can see what's what. I'll quickly go here to my label and just label those. So I could go right here and label and indicators, financial label names. Now you can see here we got on balance volume, looks like that's twice. I'll just cancel this out here. So we got some more space. We got on balance volume at the top here, and then you got RSI. And now I will remove these labels. It's a little difficult to see with the labels. Let's get rid of these labels here. So I would go here and take the labels off and go from there. So top is on the on balance volume, lower is RSI, as you can see here. So top we got CGen or Seattle Genetics, and look, it's a daily chart, as you can see here. And look, from a price to sales ratio perspective, it's 16. So what I would also do, I would just sort by price to sales ratio and look at the high valuation stock at the top. Now we got it here. Look, top of the list we got Sage Therapeutics, and as you look through Sage here, we got Sage chart here. Look, stock is coming down, as you can see here, trending down, and momentum is also going down, as you can see here, and RSI is about 50 here. So what you could do in such stocks is really you could employ a put buying strategy or a put spread buying strategy. And look, from a market cap perspective, respectable market cap, and revenue 6.38 million, not too much. And as you look through here, we got gross margin 59%. Look at that net margin. Net margin is negative 7676 here. Very low net margin. So you could employ strategies like selling put spreads on these stocks here and benefit from stock going lower. And we got a few more here. We got NTLA here. Look, if I click on NTLA, it brings up the NTLA chart here. This is also trending down, as you can see here, and on balance volume is also trending down. You could employ same strategy for NTLA also. And we got a few more as we scan through here. We got Denali Therapeutics, $22 stock. As you go higher, I like to look at a little more higher price stocks here. So look, we got a few more here. We got ITCI. Let's do one thing. Let's expand this slightly. Look, we got a few more here. We got MRTX, $53 stock. And look, we got Bill.com here. Bill.com, as you see here, it's it's coming down off late. And look, gross margin is positive, net margin is negative, as you see here. With stocks like Bill.com, you could sell some put spreads here, buy some put spreads, make some money. And then we got a few more here. Look, I got Bill.com, Zscaler, Snowflake, Sentinel, CrowdStrike, all in the same category here. You could slowly sell some, buy some put spreads here and make some money. So with that, let's do one thing. Let's go to Thinkorswim platform, look at Bill.com, and a few of these names here, and try to sell some put spreads here. All right, I would go here to Thinkorswim platform here. I would go to the trade tab. Before that, let's go to analyze tab here. Chart here, and bring up Snowflake. Look, Snowflake. Off late, Snowflake is coming down, as you can see here. Big downturn here. And on the balance volume is also down, and look, volatility is racing, and look, on there is some money, check-in money flow, smart money is flowing in, but it's stabilizing right now, moving slightly down. So with stocks like this, typically I like to do this on a on the day where stock market is slightly going higher. So look, because volatility is increasing here, you don't want to just buy put option because you're going to pay too much premium. Instead, you should do put spreads. So what I would do is I would go here, and normally I would go 66 days is good enough. I would go right here, and current stock price, as you can see here, is $113. I would just go 115 and 105 and sell that $10 wide spread. So look, we could just buy $10 wide spread. I could go just here and buy vertical here. And if you don't want to spend too much money, you could just buy $5 wide spread. You're paying $2.55, and your profit is remaining portion of this $5 wide spread here. That is $245 is your profit potential. So you could confirm and send this. What you'll do is you'll you'll basically make money as a snowflake comes down here. It's one of the good strategy here. I would confirm and send this here, and you would make some good money here. This is one thing I do. But if you're a little more bearish on this stock, you could even go like $10 widespread. I would say just here instead of 110, you could do 105 here. There you go. So this is a $10 widespread. You're paying $4.85, and remaining $5.15 is your profit potential. You are more than doubling your money. As the stock of Snowflake comes down, you'll make money. This is a good strategy. I've been deploying this strategy. Especially when the trend is down. Go with the flow and start buying the put spreads. As the trend gets higher, you could buy call spreads. So that's why you make money out of the market. Market may go up or down. If it is going down, buy put spreads. If it is going up, buy call spreads. So it's one of the best way to make money by placing some small bets like what we're doing here. All right, now let's look at one or two more here. Look, we got here Zscaler, again one of my favorite stock in this environment. I've been selling put spreads on this for a while. It's a very good feeling. As stock comes down, you could make some money. So you could do same thing here with Zscaler. You could go here to Zscaler and look at the chart. Look at the chart here. Stock is coming down as you see here, and on balance volume is also trending slightly down here. Here volatility is racing. That's why you don't want to just buy put option. It's safer with the put spreads here. Check in money, saying money is flowing but slightly negative as you can see here. So with this, we'll employ same strategy on Zscaler here. I would go 66 days out, no big deal. Stock price 140, I would go here 145. We could do same thing. We could buy here 145 and 135 put spread here and go from there. So look, we got 145, and I could if you don't want to spend too much money, you could go with this also. You're paying $278 dollars here. Your profit potential is remaining portion of $5 here, which is around $2 and 22 cents or so. But I would also do a $10 widespread if you have a little more money or buying power. I would say 140, 135, 145, 135, $10 widespread. You are paying $5.18. Remaining portion of $10 widespread is your profit potential. You could go and confirm and send. This is one way to make money from stock going down and trending down. And we got few more as you can see here. We got CrowdStrike again coming down big time, and we got Team, which is one of my favorite stock to do this strategy. Team, as you can see here, it's got a high debt on the balance sheet also. And look, we got MongoDB, same story here. You could do Team and MongoDB, same story here. We'll start with one, and you could play along and do for other one also. So look, Team. And from a stock chart perspective, look, Team is also going down as you can see here, trending down. Market does not like these high multiple names here, and volatility is racing. That's why we do put spreads here. And with that, let's go here and go into Team. I would say 45 days is good enough for Team here. You could go here 166, you could do 170. And if you're a conservative person or don't want to spend too much money, you could go with the $5 widespread. You could do 170, 165. Look, you're spending 265. Remaining portion of $5 widespread, it's 245 or 235 is your profit potential. $235, that's good enough, but I would even take it a notch higher and do 170, 160 spread. So you're spending $4.55. You'll more than double your money as stock comes down here. So this is one of my favorite strategy. You could confirm and send and go from there. So with that, thank you very much. Happy investing and trading. Try to profit from stock market coming down, and don't always place your bet on the longs. Also play some shorts like buying put spreads and buying put options. That will keep you a little bit sane during these market conditions. Thank you very much. Happy investing and trading.